Hello friends, welcome back to S Prompt Strategy video lecture series. In continuation to video lecture note series on strategic management subject, we have started videos on multiple choice questions. I hope you are finding these videos useful to you. This third video of MCQs is based on strategic tools used for business portfolio analysis, as well as there will be few multiple choice questions on balanced scorecard. We know that every business has its objective of maximizing their earnings, profitability, as well as becoming financially strong enough to be capable of earning through investing into opportunities that may be available in the future. This is possible if the organizations have planned investment on their product, services, or segments in which they are operating. If the organizations do planned investment on their product, services, or segments, it will give them expected higher return on investment with lesser risk to their investment by means of analyzing which product or segment is performing well, which product may be degrowing in the future, or how are or will be the market trends, etc. The product and services or the segments, or we will say the offerings of the business organizations, are those on which the business organization is investing its finances in terms of its development, manufacturing, promotion, distribution, sales activities, etc. So that these offerings will give returns to the businesses. Such belongings of the business organizations are called as business portfolio. Thus, the business portfolio is nothing but the collection of businesses or the product or services that make up the company. So BCG and GE9 cell matrix are used by the business organizations to analyze its current products or segments or strategic business units and decide investing priorities. That is, which product or SBU should receive more, less, or no investment, based on which organizations can develop growth strategies for their products or segments which are on growth stage, or downsizing strategies for the products which are on declining stage. This will also help organizations to evaluate the relative strength of all the products or SBUs in the company. BCG matrix, that is Boston Consulting Group matrix, is one of the strategic tool used for business portfolio analysis for deciding on investment priorities. This BCG matrix is plotted as follows. It is a 2 by 2 matrix, that is there are 4 quadrants and they are named as star, cash cows, question mark, and dogs quadrant. On x axis there is relative market share, and on y axis market growth rate is plotted. Market growth rate is the rate at which the market is growing in which that product or segment is operating. Market growth rate is calculated by the formula this year's sales minus last year's sales of that product or segment divided by last year's sales and whole multiplied by 100. This will give the market growth rate in terms of percentage, which may be in minus or it may be in plus. Here we will show it starting from 0 and going up to say 20%. Therefore, on y-axis at lower side we will write low, indicating low market growth rate, and at upper side we will write as high, as it is indicated on this slide. On x-axis, the relative market share tells us about own company's product or segment's market share as compared to best performing competitors' product or segment's market share, which is calculated by dividing own product or segment's market share by the best performing competitors' product or segment's market share. If the market share of our company and the best performing competitor is exactly same, say for example, our market share is 20% and the next best performing company's market share is also 20%, the division will be equal to 1. In other cases, it may be either more than 1, that is 1.5x, 2x, 10x, or 20x, or less than 1, that is 0.8x or 0.5x or 0.2x, etc. The ideal situation of having equal market share of both the companies, we will put it in the center as 1x. Then towards our left hand side, the relative market share is increasing, say up to 10 times or 20 times, means our market share is better than our competitors market share, and towards our Right hand side it is less than 1, that is 0.8 times, 0.5 times or 0.1 time, means our market share is lesser than our best competitor. Therefore on x axis we will write high on our left hand side and low on our right hand side. We can relate BCG matrix with product life cycle, as question mark quadrant of BCG matrix shows low relative market share and the market is growing, which is matching to the introduction stage of product life cycle. That's why question mark quadrant is numbered as 1. Similarly, the star quadrant coincides with the growth stage of product life cycle, hence it will be numbered as 2. Cash cow coincides with the maturity stage of product life cycle, hence it is numbered as 3, and the dog quadrants, that is number 4, as it coincides with the decline stage of product life cycle. Now if we read what the star quadrant tells us, then it tells us about those products or segments which are falling in high market growth rate and having high relative market share. This is the better position for the organization, and it means products are the market leaders in the growing market and will have a better future performance, return on investment, earnings, etc. Hence products and segments falling in star quadrant should receive highest investment. If we look at the cash cow quadrant, that shows low market growth rate and relative market share is high. It means these products, though they are in the low growth market, have achieved leadership position when they were in the star quadrant and having large base of loyal customers who are giving steady but constant business to the organization. Hence, investment requirement in such products will be comparatively low, but returns will be definitely higher. If we look at the question mark quadrant, it shows high market growth rate and low relative market share. It means either the products are new and are in a growing market, or the products are old and the competitor products are better performing. Only there is a question mark or problem at our firm, either in terms of improper promotion, positioning, development of product or something else. If these products are refocused, repositioned, build well again, may enjoy growing market and may give returns to the business organizations and will move to star quadrant. Lastly, the dog quadrant indicates products or segments are in low market growth rate and having low relative market share. Such products are neither going to give any returns nor the market has any growth opportunity. Reducing investment on such products or segments will be the better strategic decision. Based on the market growth rate and relative market share, when business organization places their products or segments on BCG matrix, they can take different strategic decisions, that is, decide on investment priorities. The different strategic implications by making use of BCG matrix can be understood on following slide. Organizations will calculate relative market share for their individual product or segment separately, and depending upon the market growth rate, they will position their products onto the different quadrants of BCG matrix. Since every different quadrant have different indications on market growth rate and relative market share, there will be different strategic implications that can be taken. Here on this slide, you can see for different quadrant, the strategic implications they are mentioned in the red color. Like in case of star quadrant, the strategic implications are like invest, build and hold. So we'll try to understand in detail for each of the different quadrant. For those products which are falling into star quadrant, since the star quadrant is indicating high market growth rate and high relative market share, these products or segments are giving higher returns, and hence the strategic implications will be investing onto these products as much as possible from those earnings that we are getting from products and segments which are falling into cash cow quadrant, so that we can build these products further so as to maintain the leadership position, that is better performance of those products. The various strategies that the business organizations can implement for star quadrant products can be making an integration with other businesses, or making a forward or backward integration on vertical supply chain, or it may be penetration into the market so as to get more number of new customers, or developing the market by adding new channel partners, developing supply chain for improved distribution, or product promotion, etc. Or it can be even done by modification in the existing product, that is through product development strategies. For the products which are falling into cash cow quadrant, the strategic implications will be hold, invest and harvest. Hold is to maintain the leadership position. Invest is to maintain the large base of loyal customers through promotional activities so that we can protect our customers from the competitive activities, and harvest is to reap the profits from these products with minimum investment. The various strategies that can be applied for those products which are falling into cash cow quadrants can be product development so that the product will match with the customer's requirement, concentric diversification to provide multiple options, varieties to the customers, and then slowly going to retrenchment strategies so as to do the reduction of cost or spending on cash cow products so as to manage the earnings. For the products or segments which are falling into question mark quadrant, the strategic implications will be investing, refocus, build or divest. Since these products or segments are falling into high growth rate markets, if these products are refocused, build properly by investing, will enjoy growing market as well as increasing market share can shift this product from question mark quadrant to the star quadrant. The various strategies for the product or segments which are falling into question mark quadrant can be market development, product development or penetration into that market where competitor presence is weak, or if still things don't get changed, then it is better to reduce investment on those products, that is adopting divestiture strategies. Now let us see strategic implications for those products or segments which are falling into dog quadrant. The strategic implications will be build, divest or liquidate. Sometimes some product or segments may come in high demand due to sudden change in the market. In such cases, building those products as a last try will be a suitable strategic decision. But if the products are outdated, no expected demand for these products from the market, then divestiture strategy will be a good decision. And if still the products are pulling down the performance of business organization, then it is better to liquidate these products or segments. The various strategies that can be decided for dogs quadrant can be retrenchment, divestment and liquidation. So these are the formulas that can be used for the calculation of market growth rate and relative market share. Similar to BCG matrix, GE9 cell matrix is also used for business portfolio analysis, which is the extension of BCG matrix, as BCG matrix is a 2 by 2 matrix with high and low as the only two parameters to measure market growth rate and relative market share. To overcome this limitation, a 3 by 3 matrix is introduced by General Electric and McKinsey group of companies, which considers three parameters, that is high, medium and low. On its y-axis, business strength is plotted and on x-axis, market or industry attractiveness is plotted. Business strength means how is a performance of a particular business in that competitive market as compared to all its competitors. The different parameters that makes the strength of business are relative market share, as that we discussed into BCG matrix. If a business organization is having higher relative market share, it is the leader of that market who can influence customers and have a better control on market. If the organization has a better reputation or image as compared to its competitors, the customers will remain loyal with that organization. If the organization is having better bargaining leverage with the suppliers or its distributors, it will provide them a better position in the market with higher profit making ability, as well as if the organizations have a better ability to match with the product or service quality of any of its competitor, then they can easily develop competitive advantage and beat the competition and achieve the strategic goals and objectives. Similarly, the market attractiveness for products or industry attractiveness for segments or SBUs plotted on the x-axis can be measured as high, medium or low based on various factors such as market size, market growth rate, profit margin to the business organization, intensity of the competition in that market, resources availability as required for business operations, impact of the society on business of the organization, regulatory framework if it is favorable or not, opportunities and threats available in the external environment, and availability of technology for product and services upgradation. Now, similar to that of BCG matrix, if we look at the uppermost left-hand green quadrant, it depicts high business strength and high market attractiveness. To the right of this quadrant, the middle upper green quadrant depicts the high business strength and medium market attractiveness, and the middle green quadrant of the left-hand side depicts the medium business strength and high market attractiveness. Thus, accordingly, the strategic implications given here are protect the position as the business strengths are high and segments are present in the highly attractive market or industry. Similarly, you can read strategic implications for rest of the quadrants. The GE9 cell matrix and its three color coding, we can correlate it with the tricolor of traffic signal lights. Green color indicates safe and favorable position so organizations can invest and earn their profits. Yellow colored quadrant indicates need of precautions or safety for investment as either the market attractiveness or business strength are not matching with each other, and the red colored quadrant indicates risk danger situation to the investment. Hence, the strategic implication suggests to manage the earning with the reduced investment so as to lower the losses. The products or segments which will be positioned on G9 cell, they are shown with a different size of circles. The larger the size of circle indicates larger the market size or number of customers that are present in that market and vice versa. Then within that market, our market share is also shown on the same circle. Like in the first large circle, the green part indicates our market share in that market and the pink color shows the market share of rest of the competitors and so on. Hopefully, this explanation clarifies certain theoretical concepts related to both strategic tools used for business portfolio analysis, which should help you to select the appropriate answer for multiple choice questions, which we will be discussing in this video. So, let's begin with our first question. To begin with the first question, Dash is an economic system in which goods and services are exchanged for one another or money on the basis of their perceived worth. And the right answer is option A, business. Business is an economic system in which goods and services are exchanged for one another or money on the basis of their perceived worth. When buying and selling activities takes place, that generates revenue, money or worth to both buyers as well as to the sellers, then such activities are categorized as business activities. Question number 2. A collection of investment all owned by the organization or an individual is called as, and the right answer is option B, portfolio. Collection of investments all owned by the business organization or an individual is called as a portfolio, as these are those products segments of any business organization or stocks, bonds, commodities belongings to any individual which will give earning, returns on their investment, etc. Hence the right answer is option B, portfolio. Question number 3. The best business portfolio is the one that best fits the companies and the external environment, such as, and the right answer is option D, all of the above. The business portfolio is the collection of segments and products that make up the company, in which the business organization invest their capital so as to get good return on their investment and profitability. Performance of products, that is ROI, and profitability depends upon strength and weaknesses of the organization, opportunities, threats and demand present in the external environment, and hence the right answer for this question is option D, all of the above. Question number 4. The major objective of every business organization is to maximize dash by investing their funds, and the right answer is option D, all of the above. The major objective of every business organization is to maximize their invested capital by revenue generation, by generating profits, as well as by earning maximum return on their investment. Question number 5. Business portfolio analysis helps to understand, and the right answer is option A, investment priorities on products and or segments. A collection of investments all owned by the business organization is called as business portfolio. Since businesses expect to get return on their investment on each of their portfolio, therefore those portfolio which are performing can give maximum ROI. will be given highest investment priority. Thus, business portfolio analysis helps to understand investment priorities on the products and or the segments which are present within that company or which belongs to that company. Question number 6. The acronym BCG Matrix stands for, and the right answer is option B, Boston Consulting Group Matrix. Every business carries their portfolio on which they will be investing to build them all and to get good return on their investment. Which portfolio is performing well and on which portfolio the business organization should invest more can be analyzed and decided by using strategic tools such as BCG and GE9 cell matrix. The BCG matrix is developed by Bruce Henderson of the Boston Consulting Group in the early 1970s, useful for long-term strategic planning and to decide investment priorities. Question number 7. The another nomenclature for BCG matrix is, and the right answer is option C, growth share matrix. The BCG matrix is a business portfolio analysis strategic tool which analyzes business portfolios in respect to the market growth rate in which they are present and the relative market share of those portfolios in comparison to the best performing business organization's market share. Therefore, it is also called as growth share matrix. Question number 8. In the BCG matrix, SBU, that is strategic business unit of a company is, and the right answer is option D, all of the above. When a business is a big size company, large number of products operating into different industries for different set of customers, to have a better control and focus on its performance, it is divided as different strategic business unit, that is SBUs, so as to have separate mission based on which strategies can be formulated matching to the requirement of each division, which works as a relatively autonomous unit of a firm. Question number 9. Dash is plotted on y-axis of BCG matrix, and the right answer is option B, market growth rate. In BCG matrix as a strategic tool which is used for the analysis of business portfolio, on its y-axis the market growth rate is plotted and on x-axis it is the relative market share which is plotted. Question number 10. Dash is plotted on x-axis of BCG matrix, and the right answer is option A, relative market share. In BCG matrix strategic tool, on y-axis it is the market growth rate which is plotted and on x-axis it is relative market share which is plotted. Question number 11. Relative market share, that is RMS, on x-axis of BCG matrix is calculated as, and the right answer is option C. In competitive market, organizations are having higher market share as compared to the rest of other competitors. It is treated as the best performing organization who can have better strategic control and influence on the market as well as on the customers. When a company compares its own market share, that is the test company, with the best performing firm, it allows to understand its relative position or relative market share in that competitive market. Question number 12. The relative market share plotted on the BCG matrix tells us about, and the right answer is option D, market share of one firm in relation to the market share of best performing company. So you can refer to the explanation what we have discussed for question number 11. Question number 13. Star quadrant of BCG matrix represents product or segments falling in dash, and the right answer is option C, high market growth rate and high relative market share. Star quadrant of BCG matrix represents products or segments falling in high market growth rate and high relative market share. Question number 14. Star quadrant products or segments are related to which stage of product life cycle? And the right answer is option B, growth stage. BCG matrix can be related to product life cycle or industry life cycle for the strategic decision making. Star quadrant products are in highly growing market, performing better than its competitors, and it is similar to that of the growth stage of PLC, which depicts growing market and growing demand. Question number 15. In BCG matrix, the star quadrants indicates, and the right answer is option B. In BCG matrix, the star quadrant indicates positive cash flow, relative market share is high, market growth rate is high, and generating high profits, which can be focused for better profits generating in the future. These products or segments are showing glowing, shining performance, and hence they are related to stars. Question number 16. Cash cow quadrant of BCG matrix represents products or segments falling in dash, and the right answer is option B, low market growth rate and high relative market share. Cash cow quadrant of BCG matrix represents product or segments falling in low market growth rate and high relative market share. We have explained all this in detail on our initial slides. Question number 17. Cash cow quadrant products or segments are related to which stage of product life cycle or industry life cycle? And the right answer is option C, maturity stage. BCG matrix can be related to PLC or ILC for strategic decision making. Cash cow quadrant products are in a slow growth market performing better than their competitors, and it is similar to that of maturity stage of PLC, which depicts stagnant growth and slowed demand. Question number 18. Cash cow products or segments always fall in dash industry. And the right answer is option C, matured industry. As we discussed previously, cash cow products are the matured products, old products which have performed better than the competitors in its early stage, such as introduction and growth stage, occupied a significantly better relative market share, and in spite of stagnant growth rate, giving good returns to the organization in terms of profitability. Question number 19. In BCG matrix, the cash cow quadrants indicates, and the right answer is option C. In BCG matrix, the cash cow quadrant indicates positive cash flow, relative market share is high, market growth rate is low, but generating high profits which can be utilized for other products. Question number 20. The products or segments which require least investment but at the same time give higher returns to the businesses are falling in dash, and the right answer is option B, cash cow quadrant. Cash cow product or segments are falling in the matured industry. It indicates that the market is not growing, acquisition of new customers is less, and associated customers retention is high. Since the relative market share is higher than any other competitors, already having a large number of potential loyal customers associated with these products or segments, it requires least investment, but at the same time it gives higher returns to the businesses. Question number 21. Those firms must make drastic changes quickly to avoid further demise and possible liquidation of those product and segments that are falling in dash of grand strategy matrix, and the right answer is option C, quadrant 3. Products and segments falling into cash cow quadrant are in a growth and mature stage of product or industry life cycle where invest and harvest strategies are adopted by the business organizations must be taken proper care to avoid its possible demise. Question number 22. The market is not growing, acquisition of new customer is less and associated customer retention is high is indication of dash, and the right answer is option B, cash cow quadrant. As we discussed previously, cash cow products are those matured products having stagnant growth rate, giving good returns to the business organizations in terms of profits. Since the product and segments are falling in the matured industry, it indicates that the market is not growing, acquisition of new customer is less, and the associated customers retention is high. Question number 23. The strategic goal of every business organization for the products and segments which are falling into cash cow quadrant will be, and the right answer is option B, customer retention. Cash cow product or segments are falling in the matured industry. It indicates that the market is not growing, acquisition of new customer is less, and associated customer retention is high. Hence, the major objective of every business organization for the product and segments which are falling into cash cow quadrant will be customer retention. The customer satisfaction program, loyalty programs, and other such promotional methods form the core of marketing plan for a cash cow product or SBUs. Question number 24. The cash flows from the products falling in cash cow quadrant is, and the right answer is option A, positive. When the product or segments falls into cash cow quadrant, it is related to the matured stage of product or industry life cycle where invest and harvest strategies are adopted by the business organization, as even after low amount of investment, these products are giving high returns or earnings to the business organization, showing a positive cash flow as these products are established, old and trusted products. Question number 25. Question mark quadrant of BCG matrix represents product or segments falling in dash, and the right answer is option A, high market growth rate and low relative market share. So question mark quadrant of BCG matrix represents product or segments which are falling into high market growth rate and low relative market share. Question number 26. Question mark quadrant product or segments are related to which stage of product life cycle? And the right answer is option A, introduction stage. BCG matrix can be related to product life cycle or industry life cycle for strategic decision making. Question mark quadrant products are either in a growing market, newly introduced products, yet to be accepted by the customer, and hence there is a question mark uncertainty on these products' performance. Sometimes these products may be the old products and competitors are already established into the market. Then there is some problem in our company, or there will be a question mark in our company's product in terms of product positioning, or maybe some promotional activities are not matching with the customer expectations to generate awareness of products, or maybe to influence the buying decision of the customer. So in such situation, to overcome this question mark, the company is required to formulate the strategies which will help to refocus, rebuild, or reposition these products so that the products from the question mark quadrant can be shifted to the growing star quadrant. Question number 27. In BCG matrix, the question mark quadrant indicates, and the right answer is option B. So in BCG matrix, the question mark quadrant indicates negative cash flow, relative market share is low, market growth rate is high, and generating low profits. Some problem is in the company's products or strategies. Question number 28. Dogs quadrant of BCG matrix represents product or segments falling in dash, and the right answer is option D, low market growth rate and low relative market share. So dogs quadrant of BCG matrix represents products or segments falling into low market growth rate and low relative market share. Question number 29. Dog quadrant product or segments are related to which stage of product life cycle? So BCG matrix can be related to product life cycle for the strategic decision making. Dog quadrant products are in a declining market, not performing. It is similar to that of the declining stage of product life cycle or industry life cycle, which depicts degrowth in the market and falling demand from the customers. Question number 30. In BCG matrix, the dog quadrant indicates, and the right answer is option D. In BCG matrix, the dog quadrant indicates negative cash flow, relative market share is low, market growth rate is low, and generating losses which should be divested by the company. Question number 31. The strategic implications for star quadrant product or segments will be dash. So the right answer is option B, invest and build. Product or segments which are falling into the star quadrant represents the organization's best long-run opportunities for the growth and profitability, as they are present in high relative market share and high growth rate industry. Hence, they should receive substantial investment to maintain and strengthen their dominant position in the competitive market. Question number 32. Which of the strategies are more suitable for star quadrant product or segments? And the right answer is option D, all of the above. Product or segments falling in the star quadrant represents the organization's best long-run opportunities for growth and profitability, as they are present in high relative market share and a high growth rate industry. Hence, they should receive substantial investment to maintain and strengthen their dominant position in the market. Forward or backward or horizontal integration on the supply chain, market penetration, market development, and product development are the appropriate strategies. We have got a detailed explanation on these various strategies that can be formulated for products or segments which are falling in the different quadrants of BCG matrix. So you can refer to the initial explanation which is in the same video. Question number 33. If the product or segments falling in star quadrant are focused or developed well, will move into dash, and the right answer is cash cow. So product or segments which are falling in the star quadrant have a high relative market share position, and since they are competing in a high growth industry, if these products or segments are focused well, positioned well, and promoted well, will move from star quadrant into the cash cow quadrant, or else it will move to question mark quadrant. Question number 34. The strategic implications for cash cow quadrant product or segments will be, and the right answer is option A, invest and harvest. Cash cow quadrant products or segments are in the high relative market share position, but they are competing in a low growth industry. These product or segments are called as cash cow because they generate cash in excess, that is more return on investment as compared to the volume of investment. Question number 35. Which of the following strategies are more suitable for cash cow quadrant products or segments? And the right answer is option D, all of the above. Cash cow products or segments should be managed to maintain their strong position as long as possible. Product development or diversification may be the attractive strategies for strong cash cow products. However, cash cow divisions become weak. Retrenchment or diversity strategy can become the more appropriate strategic decisions. Question number 36. Strategic implications for question mark quadrant product or segments. And the right answer is option C, invest, rebuild or refocus. Product or segments which are falling in question mark quadrant have a low relative market share position, yet they are competing in the high growth industry. Generally, these product or segments cash needs are high and their cash generation is low. If business strengths are enough to compete with the competitors, then they should go for rebuilding, refocusing and repositioning strategies so that these products can be shifted from a question mark quadrant back into the star quadrant, as these product or segments are belonging to the highly growing market. Question number 37. The strategic goal of every business organization for the product and segments which are falling into the question mark quadrant will be, and the right answer is option A, customer acquisition. Question mark quadrant product or segments are falling in the introduction stage or old products but not performing situation of industry. It indicates that the market is growing. However, acquisition of new customers is not happening as compared to the competitors who have got sufficiently large base of customers. Hence, the major objective of every business organization for product and segments which are falling in the question mark quadrant will be customer acquisition. Question number 38. Which of the strategies are more suitable for question mark quadrant product or segments? And the right answer is option D, all of the above. Cash needs for product or segments which are falling in the question mark quadrant are high and their cash generation is low. If business strengths are enough to compete, then they should go for market penetration, market development or product development like intensive strategies or to sell them. That is, the company should go for either divestment or liquidation strategies. Question number 39. If the product or segments falling in question mark quadrant not focused or developed well will move to, and the right answer is option C, dogs quadrant. Product or segments falling in question mark quadrant have low relative market share position, and since they are competing in highly growing industry, these product or segments should be focused well, positioned well and promoted well. Then they will move from question mark quadrant into star quadrant. But if these products are not positioned or promoted or built well, they will move to dogs quadrant. Question number 40. Strategic implications for dogs quadrant product or segments will be, the right answer is option D, divest or liquidate. Product or segments which are falling into the dogs quadrant are having low relative market share position and competing in a slow or no market growth rate industry. Hence, investing on such product or segments may result into a big loss to the business organization. Therefore, divestment or liquidation are the suitable strategic decisions. Question number 41. Cash flows from the products falling in the dog quadrant is, and the right answer is option B, negative. When product or segments falls in the dog quadrant, it is related to the decline stage of product or industry life cycle, where retrenchment strategies are adopted by the business organization, as even after investment, these products are not giving returns or earnings to the business organizations and they are showing negative cash flow. Question number 42. Which of the strategies are more suitable for dog quadrant product or segments? And the right answer is option D, all of the above. When product or segments falls in the dog quadrant, retrenchment can be the best strategy to pursue because sometimes dogs may bounce back depending upon product segment and market condition. Still, after persistent investment and cost reduction, if loss continues, then it is wise to go for divestment strategy. Question number 43. In BCG matrix, instead of profits, relative market share, that is RMS of product or segment, is given more importance because The right answer is all of the above. Relative market share tells not only our own market share but our market share as compared to our best performing competitors' market share, which is directly related to cash flow and level of profitability of the firm, based on which one can predict future performance of those products and segments. Thus, instead of only going for profit, relative market share is taken in the consideration while plotting on BCG matrix. Question number 44. The acronym GE9 cell stands for, and the right answer is option B, General Electric 9 cell matrix. GE9 cell matrix or GE McKinsey matrix is a strategic tool used for portfolio analysis which is developed by General Electric and McKinsey and Company of USA in 1971. It is similar to that of BCG matrix, and actually the GE9 cell matrix is the extension of BCG matrix by overcoming the limitations and using 3 by 3, that is equal to 9 cell matrix. Question number 45. Dash is plotted on x-axis of GE9 cell, and the right answer is option C, market attractiveness. GE9 cell matrix is a strategic tool used for portfolio analysis. Unlike BCG matrix, GE9 cell matrix is a 3 by 3, that is 9 cell matrix. It is plotted against business strength, that is the resources and the competitive advantage of a firm on y-axis, and attractiveness of industry, that is low risk, high return on investment, less competition, better position in the market, etc. is plotted on x-axis. Question number 46. Dash is plotted on y-axis of GE9 cell matrix, and the right answer is option D, that is business strength. Explanation you can refer to the previous slide. Question number 47. GE9 cell matrix is a strategic tool that offers a systematic approach used by the Dash to prioritize their investment among the various business units. And the right answer is option B, multi-business enterprises. GE9 cell matrix is a strategic tool that offers a systematic approach used by the multi-business enterprises to prioritize their investment among the various business units. In GE9 cell matrix, business and its share as compared to the total size of market is considered for positioning on GE9 cell. The business units differs in size depending upon the total size of market and shows the share of that business into that particular market. A detailed explanation on the size of these circles and the market share, how and why it is shown, is there on the initial slide, so you can refer to that part for further understanding. Question number 48. Which one of the following is not the factor that is related to business strength? And the right answer is option C, resource availability. Any organization will carry strength over its competitors if its own market share is higher than its competitors. Reputation or image of the organization is better than its competitors. That will help to get large number of potential and loyal customers, as well as if the organization is having ability to match with the product or service quality with that of the competitors or industry standards, all will make the business stronger than its competitors. Resources availability is the factor which is related to attractiveness of market. Question number 49. Which one of the following is not the factor that is related to market attractiveness? The right answer is option D, relative market share. Market or industry attractiveness is nothing but a favorable environment for the businesses to invest or enter into that market. If the size of market, that is if the market contains large number of potential customers, if the market is showing good growth, this indicates constant or increasing demand for the product and services in that market. And if the regulatory environment are favorable, then the market or industry becomes even more attractive for the purpose of investment. Relative market share is a business strength related factor. Question number 50. Which of the following does not relate to market attractiveness? And the right answer is loyalty of customers. Market or industry attractiveness is nothing but a favorable environment for business to invest or enter into that market. If the market is providing high return on investment, high profits, and if the intensity of the competition is also low, this indicates the external environment is favorable and the market or industry is attractive for investment. Loyalty of customer is a business strength related factor. Question number 51. The color symbols used in GE9 cell matrix can be correlated to, and the right answer is option A, traffic signal or traffic signal light colors. GE9 cell matrix can be color coded with green, yellow, and red zones based on which strategic decisions can be taken by the business organizations. Just like traffic signal, the red color which indicates stop means a dangerous situation not to move. Similarly, in case of business, decisions will be unfavorable environment not to invest or divest. Yellow means caution. So depending upon the business strength and attractiveness in the market, cautiously firms should invest. And green zone means those businesses are in a favorable environment and can go for safer investment. Question number 52. Which one of the following is not a correct strategic implication for green zones on GE9 cell matrix for businesses? And the right answer is option D, manage for earnings. Green zones on the GE9 cell matrix are favorable situations for the businesses. The uppermost left corner quadrant indicates the business is in a highly attractive industry and business strength is also high. Hence, organizations should formulate strategies to protect their position. The upper middle quadrant indicates the medium industry attractiveness but the business strength is high. Hence, organizations should build these products selectively by investing into most attractive segment. And the lower middle quadrant indicates medium business strength and high market attractiveness. Hence, one should invest to build selectively. Question number 53. Which one of the following is not a correct strategic implications for yellow zones on GE9 cell matrix for businesses? And the right answer is option D, protect the position. Yellow zones on GE9 cell matrix are medium to low favorable situations for the businesses. The uppermost right corner quadrant indicates the businesses are in a low attractive industry and business strength are high. Hence, organizations should formulate strategies to build selectively. The middle quadrant indicates the medium industry attractiveness and medium business strength. Hence, organizations should build those businesses selectively to manage their earnings, that is to get maximum return on investment with minimum spending onto those products or segments. And the lower left quadrant indicates low business strength and high market attractiveness. Hence, one should focus or refocus their business based on the strengths which is available as compared to any of their competitors. Question number 54. Which one of the following is not a correct strategic implication for red zone on GE9 cell matrix for businesses? And the right answer is option D, protect and refocus. Red zones on GE9 cell matrix are the unfavorable situation for businesses. The lowermost right corner quadrant indicates business is in a low attractive industry and business strength is also low. Hence, organizations should formulate strategies to divest their businesses due to heavy losses. The upper middle right hand quadrant indicates medium industry attractiveness and the low business strength. Hence, organizations should build businesses to manage their earnings selectively in the attractive markets. And the lower middle quadrant indicates the medium business strength and low market attractiveness. Hence, businesses should try to harvest as much as possible based on the strengths. Question number 55. Which of the following that gives the top managers and stakeholders a fast and comprehensive views on how business is doing? And the right answer is option A, balanced scorecard. Balanced scorecard is a comprehensive analytical tool used by the top managers to know the present status of its resources and what they can achieve. That is, whether they are able to achieve their vision in the coming period of time. This strategic tool also allows top managers to understand how effectively the resources can be utilized to achieve their strategic intent. And this tool is used for understanding the current position and the result of past actions by analyzing four perspectives such as customer, finance, internal business perspective, and learning and growth perspective. Question number 56. Which one of the following is not the four perspective of balanced scorecard considered for analysis and decision making by top managers? And the right answer is option A, employee perspective. Balanced scorecard is an analytical tool for the top managers to know the present status of its resources and what they can achieve in the coming period of time by answering the questions like how did they perform this past month or quarter or the year, and how are they going to do the next month or the next quarter or the next year. To be in a better position, the company should not only look in the past or today's financial performance, but the company should also focus on the future actions and achievements considering customers, innovation and internal business processes as well as learning and growth perspective. Employee perspective is not one of the fourth perspective of balanced scorecard. Question number 57. While using a balanced scorecard, a company's market share is typically classified as an element of the firm's, and the right answer is option B, customer perspective. Balanced scorecard is an analytical tool considering the following four perspectives for decision making. The first is the financial perspective. How do we look at the shareholders? Because shareholders have invested their money in raising capital of the organization, then obviously if the shareholders are expecting to get good return on their investment, and due to financial performance of the organization, if organization is able to give good returns to the shareholders, then obviously the shareholders will look at the organization positively for future investment. Second is customer perspective. How do customers see to us, or what they expect from us? Obviously every customer expects to get value from the organization, and if organizations are able to fulfill the need wants of the customer, and by delivering value to the customers are satisfied, and if these customers are remaining connected with the company, then obviously the customer perspective is achieved by the organization. The third is internal business perspective. What we must excel at. Obviously every time you need to do something better than what you have done previously in the past. If you can do that, then definitely it will continuously help you to maintain your performance, and that performance will help you to achieve your financial perspective. And fourth is the learning and growth perspective. Can we continue to improve and create value for our customer by means of learning from our past, as well as from the learnings which we are going to get from the competitors, so that we should have a growth perspective. If customers looks at the business firm delivering quality product or services, then they will continue to be with the company that adds up in the market share. Question number 58. Balanced scorecard mainly focuses on evaluating, and the right answer is option D, non-financial performance. Balanced scorecard is an analytical tool used by the top management to evaluate past and present performance for future developmental planning. To be in the better position, the company should not only look in the past or today's financial performance, but should also focus on future actions and achievements considering customers, innovation, internal business purposes, as well as the learning and growth perspective, that is the non-financial performance of the company. Question number 59. The balanced scorecard mainly is a strategic tool for dash of performance of the organization, and the right answer is option A, evaluation. Balanced scorecard is an analytical tool used by the top management to evaluate past and present performance of the future developmental planning. Question number 60. Which one of the following is not one of the four operational parameters applied in balanced scorecard as a strategic tool for evaluating performance of the organization? And the right answer is option A, goals. Balanced scorecard as an analytical tool used by the top management to evaluate past and present performance for future developmental planning evaluates performance against four perspectives, have four operational parameters. The first is objectives, what the organization wanted to achieve. Second is measures, how to measure or track the performance. Third is targets, what is the desired level of performance. And fourth is the initiative, the strategic initiatives that has been taken to achieve the objectives of the organization. So for each of the perspective, all these four operational parameters will be compared, and based on which the strategic decisions can be taken by the top management. Question number 61. Who introduced the strategic tool balanced scorecard? And the right answer is option C, Norton and Kaplan. Balanced scorecard, as it is said, that it is a comprehensive analytical tool for the top managers to know the present status of its resources and what they can achieve, that is vision, in the coming period of time. This strategic tool allows the top managers to understand how effectively the resources can be utilized to achieve their strategic intent, and this tool is introduced by Norton and Kaplan in 1992 at Harvard Business School. Question number 62. The central goal of strategic tool balanced scorecard is to evaluate present status of its resources so as to understand whether the organization is able to achieve its dash or not. And the right answer is option A, vision. With this, we have done with the multiple choice questions related to BCG matrix, GE9 cell matrix, and balanced scorecard. I hope the content is useful to you. The explanation which is given to each multiple choice question can help you even to write answers to the subjective questions. If you like the content of this video, please press like button, share it with your friends, and please don't forget to subscribe to this channel. Strategy, happy learning, happy e-learning. Thank you.